The coin I added to the portfolio today is called vEmpire.
And they are the largest decentralized metaverse investment organization in the world.
Hello, everybody, and what a lovely day it is. Let you kick off, and I'll do some button tapping in the background. You know what comes after Roby and Qcoin? When Binance. So I've heard a rumor that there's a bear bigger than me, and I refuse to believe it. And my team has been obsessing with the realistic trader. And how realistic? Because if he's as bearish as me, then everyone is going to be very depressed after this episode. So we're going to see. We've got Siam, aka the realistic trader, with us.
Hey, can you hear and see me okay?
I can, and that's a very bright get up behind you.
Yeah.
The sunset. Whereabouts are you? Are you out the UK?
Norwich, born and bred. Haven't really moved.
My wife's dad has a house up in Seapooling.
Yeah, not far.
Love it up there. Just the beach is just quiet enough that no people. You don't get the same sort of rush that you get to Great Yarmouth.
Yeah.
Always down for some amusements. It's the degenerate gamblers in us. But yeah, thanks so much for joining. My team has been particularly obsessed with your channel. I think it's
thank you.
Yeah, because they never like to tell me if my bearish calls have come off. But they said that you are equally as bearish, so they can praise you, and I presume that that's their replacement for praising me.
Well, I think I'm going to disappoint you because I'm not a perma bear. I'm like the name, the realistic trader. I don't like letting crypto Twitter or crypto YouTube influence my ideas, if that makes sense. So I purposely don't. I just tune out everyone and I just say what I see. And what I've seen this year is a crock of shit. And what I'm seeing next year is going to be pretty horrendous as well. So, but I will be. I'll be the first to turn bullish the moment we have the next big drop. So,
yeah. Well, I mean, I'm in agreement in terms of my. Well, I think I learned the hard way of back in 2020 of trying to fight the Fed. And now it's crazy that suddenly everybody thinks that it doesn't work the other way around. QE, don't fight the Fed, everyone go long. QT, nah, doesn't work that way. So it's crazy, the shift in people's attitudes. Speaking of that, the shift in attitudes of Jerome Powell himself from his comments at 3,700 compared to his comments at 4,000. You'd think that I was expecting him to go so hard the other way, but yeah, he didn't. But it would be interesting to know sort of your background in terms of trading. Like, were you in finance, self-taught, or?
Yeah, self-taught really. I used to be an Air Force pilot, so I joined the Air Force when I was 18, and I started trading when I was 18. So for the first, 8 years of my professional career, I was juggling flying with trading, and then eventually trading won once I started getting better at it. And then I left the Air Force, 2010-ish. And then been full on ever since. So 18 years of trading. The first 7 years were just horrendous.
Tell you what, because I started out, my first job was as a junior broker at a CFD, an advisory CFD and spread betting firm.
Oh, which one?
JNF Capital.
No, not heard of it.
Fair enough.
No.
I'm pretty sure that they're not around anymore, and they weren't very good. But that threw me in the deep end of, like, firstly, well, junior broker, you weren't actually trading. You were literally boiler room phone basher, calling up clients, and then once you get them on board, then chuck them up to the trader. But that gave me a deep dive into finance. And I did really well. Always loved the sales environment. Always loved finance. So really enjoyed that. And eventually, I was trading at the firm myself. But the problem was once I advanced to like a trader, I was like 21, and it was my first role. So again, when I was trading as a profession, I was much worse than I was now when I don't do it as a job. But you got to learn from your mistakes. To be honest, I was known as El Shorto even back then. I did amazing in bear markets. Wasn't so good in bulls, funnily enough. But yeah, it'd be good to know what your current take is. Because I've seen a few of the videos that you've done, and you tend to. I was also wondering because I hadn't seen your face before in any of your videos. So
Really?
I've never seen you. I'd only seen you talking over the chart.
Okay.
I just hadn't watched enough. But yeah, it'd be good to know your current thoughts on the setup, especially now that we are lower down into the. I see a few charts, and everyone was talking about the ascending triangle on the S&P 500 in particular, and then some people were saying we've broken out of it, but then I've seen half of the people have redrawn the line and saying we're still in it. So yeah, it'd be interesting to know your thoughts on that, because I tend to base my crypto trading, rather than being on TA, around TA on stocks. I'm not sure.
Yeah. Yeah, no, there's obviously correlations. Well, there's coincidence, correlations, and causations, which a lot of people misunderstand. But there is a definite correlation between stocks and crypto, and it always ebbs and flows, but it always varies between a sort of 75% to a 90% correlation. So the S&P 500 is what I call the mothership, and whatever that does, everything else in the world follows pretty much. So can I share my screen?
You should be able to.
Present, share screen. Oh dear, this is going to go horrendously wrong. Is it this one? What can you see now?
Nothing's come up for me, but let's check. There we go. The I think Liam or Harvey is on the host setting, and they've let you, so I can see.
Sweet. Yeah. So these lines I drew a long time ago, and there was this is actually quite refreshing because I'm not actually allowed to talk about regulated assets, so like stocks, currencies, etc. But seeing as I'm not being paid for this is not part of the Realistic Trader. This is simply an interview. This is basically me giving my own opinion in a pub, basically. So a bit of freedom now, finally. But yeah, so I've had these lines drawn on the S&P for a long time, and we are in some sort of descending channel of some sort. And I drew this line, this arrow coming down here long before it hit this upper resistance. And I was saying that most crashes, if you look throughout history from sort of 1880s onwards, most crashes happen in October, or October to November time. Well, let's say mid-September to end of November time. And that's really what this red sort of period is here. And I said that we'll probably bounce off this level, make our way down here. And then to be honest, I wasn't too sure what would happen once we hit this level here, because there was an equal opportunity of a proper Armageddon down to this 3000 level. So if we really zoom out on the weekly chart, you can see I've got some old lines that have not budged. So yeah, so basically I do see at some point the S&P 500 coming down to attack these 3000 levels. And I think we've just had a bit of a suckers rally here, because we've just come back up here and we're bouncing off this level again. So looking at this, I'm looking at least another attack down to sort of 3,400. But the thing is, I also have seen or have heard people saying, "Oh yes, we're going to get back to pre-COVID lows, etc." Which is down here at 2,200, and I think that is wildly unrealistic. And the reason being is that because you have to consider all. So the thing with trading is that you're not Mystic Meg. You don't have a crystal ball. You literally do not know what's going to happen. But you have to come up with sort of 3, maybe 5 probable outcomes or probable outcomes over whatever time frame you're looking at, and then you have to apply a probability weighting to them, and then actions on each one. So if this happens, I'm going to do this. If this happens, I'm going to do this, etc., etc. So you're normally straddling the market with about 3 different outcomes with action plans, ready to do, and so you don't actually give a shit what happens. You're just going to execute what you see. Now, I have the reason I'm dismissing this COVID low down here at 200 is I think people that are saying that don't understand the currency supply. So as you can see, if I draw a little line here, we had the March 2020, and then it absolutely capitulated. And then from there, the world basically went into QE overdrive. We printed our way out of, we literally just hit the brrr button. And so when you look at the currency, the USM2, I'll come with that, USM2 from end of February. So here we go. Look at this. So this is US currency supply. And that little hockey stick bit there is the 1st of February. So we started crashing like crazy. And we went from, the US went from $15.5 trillion in terms of the currency supply. And by May, it hit 18. So they just printed $3 trillion out of their ass, in months. And then when you take it from the 1st of February 2020 to the peak of that in the 1st of Jan 2022, we're now at 21.83. So really, in 2 years, they printed, what's the difference between 22, so $8 trillion in a 2-year period. Let's put that bit in perspective here. To go from this level here of 15.5, and then let's try and find, minus 8, so 7, Jesus. So it took 2006 to 2020 to print $8 trillion. So that's 14 years to print $8 trillion, and then they printed another $8 trillion in 2 years. That will have ramifications. So, if you go back to the S&P 500, because there's $8 trillion of extra currency just sloshing around, I don't think the S&P can physically get back down to these 200 levels properly. Which is why whenever you look at the S&P 500, I think it's a bit of a pointless thing just looking at it on its own. You have to divide it by the currency supply. So if you look here, I've got a chart which is the S&P 500 divided by USM2, and this gives you a much clearer picture of how healthy the stock market really is. So if we zoom out here for a moment, and if we take these lows, there's definitely something going on there. We've got something going on here. Something happening along these lines there, and also I'm doing some really rough charting. This is not accurate.
Not financial advice.
Yeah. So if you look at this is basically the S&P 500 when you account for actual currency inflation, as in monetary inflation. So where we are now, which is this bit here, means we are no better off than where we were in 2014 or 2008 or even 1995 or even pretty damn close to 1971. So what this means is, if you're going to be a little bit more accurate, I'll just draw a big fat line across where we are, horizontal, boom. So if you put $1 into the S&P 500 on the 27th of May, 1996. Right now, you only have $1 worth of purchasing power. You've made nothing in real terms. That's the craziness, isn't it?
I'm wondering, because have a strange mix in terms of. I think if Liam or Harvey are on the stream, if you can put the thing down into small, just every time time goes back, it makes the channel of the matrix of ever expanding back. But yeah, the thing that I find that I have a very mix of, because maybe it's just because working in the industry and working in blockchain, I subscribe to there we go, the view that I guess I don't want to say I'm a conspiracy theorist, but a lot of my views end up being along that route, and I am very much a believer in the power of the US dollar being artificially pushed higher. Because I believe that with the fact that the US is losing its grip and we are entering sort of a multipolar world, Russia wants to escape with the ruble, even Euro wants to escape and start paying for oil and energy in euros until that got cut off by, in my opinion, the US very obviously blowing up Nord Stream with the help of the UK. And I'm of the opinion that the reason why we are raising rates, and we will continue to raise rates, is the fact that if you have your enemies, or whether they are or not being political, who are no longer taking on existing US dollar denominated debt, you can only bring them back to the table by making their existing debt as expensive as possible. Combined with, are you familiar with the dollar milkshake theory?
No.
So the dollar milkshake theory is obviously a currency theory that effectively has the fact that when the US starts its rate hiking cycle, they push the dollar higher. So that increases the import-export costs for all other countries. So suddenly they need to print more of their own currency in order to pay the exact same debt.
Oh yeah, just normal currency wars. Yeah.
The one I've seen is there's a video on it by like Santiago Capital and somebody else, but yeah, essentially they print more money, which devalues their currency. Dollar goes higher, and that there is no global demand for any other currency. Really, like who needs euros apart from to buy you could argue like cheese, sort of exports of stuff like from France, etc. Germany obviously is about to get absolutely obliterated if the winter is colder than expected. They've got 100% reserves, but they won't necessarily last if we have a very cold winter. So there's no actual real buying pressure, because people don't tend to think about foreign exchange in the general market as sort of buy and sell pressure, because it's such a massive market. It seems like crazy to think of it, but the actual global demand for any currency other than the dollar is minuscule compared to like the grand picture. So with such a financial system that's denominated in dollars, energy system denominated in dollars, with OPEC, the Saudis, the only ally left that they had in OPEC, now pushing away, the argument is, on my conspiracy brain, that the US is purposely trying to inflate the dollar because they pretty much got one cycle left. Now they've lost the Saudis as well. They've lost China, ruble, yuan, and now that the Saudis are no longer on side, the global demand for dollars next cycle is going to be significantly lower.
Yeah, agreed.
So that's my sort of mixture between fundamentals, macro, and conspiracy, is that the US is likely to give itself a lot of pain on the bets that it will give more pain elsewhere quicker. Do you have any of those sort of semi-conspiracy like macro views?
Yeah, so with things of this sort of nature, there's never one direct or clear answer. It's normally a big hodgepodge of lots of different competing things. So we have the petrodollar system, which is what, are you familiar with the petrodollar system?
I'm not, to be honest.
So basically what happened, Kissinger made this deal. So from 1975, Kissinger made a deal with King Faisal II of Saudi, where all Saudi oil exports would be done in the dollar. And by end of 1975, all OPEC had conformed to this. So the US basically wanted to make sure that oil embargoes and like they experienced in the early 70s wouldn't happen again. So what this meant is that every single country on the planet had, whenever they were buying oil, which is constantly, because every country drinks oil like water, they had to swap their currencies into the dollar to do the transaction, which meant all global oil transactions were done in the dollar and therefore flowed through the Federal Reserve, which means technically the US, because they had printing ability, as in database editing privileges, they've had free oil since 1975. So that's one of the reasons why the dollar has always been strong. And also, like you mentioned with the debts, if you have most countries are massively indebted to the Federal Reserve and the IMF. So if the dollar is strong, it's better for the US, whereas if it's weak, it's easier to pay off that debt. But now moving forwards, dollar strength is actually, so although I see short-term, I've got some contradicting issues here, because when Fed coin comes out, or the digidollar, whatever they want to call it, it's in the US's interest that everyone is in the dollar, or as many people as possible, because then all of a sudden they have complete optics. So, for example, if I am a Russian oligarch and I've got $20 billion sat there in some sort of a Swiss bank account that no one knows about, blah blah blah. Believe it or not, the Federal Reserve hasn't got a clue where that money is. So once dollars leave the shore, they lose optics on it all. So when we have CBDCs or Fed coin, digidollar, or whatever, every single cent will be fully trackable, fully traceable, trackable. They'll probably have a massive room of screens of hotspots of where all the money. Sorry?
Maybe a leaderboard.
Yeah, exactly. And you can do some really good data mining. So you could, plug into the AI, which is no doubt will be part of it. Show me all the hotspots of concentrated dollars over $10 billion or $100 billion. Boom. Okay. And then all of a sudden they get their magnifying glass and go, okay, there's $200 billion there. What's that? Who owns that? How did it get there? And then all of a sudden they can do all sorts of stuff. But at the moment, the reason why the dollar has been on a massive rally, basically for the last not 2 years, it's really the last, when looking at the dollar, it's actually been on a massive rally since 2012. But it really did start picking up in if I share my screen, I've got the dollar open. I don't know if you can flop it over.
I'll do a little waiting for I think there's a lag. There we go.
Yeah, there we go. So here's the dollar index. So the US dollar, not the Dixie, the US dollar index from 2012. It's been basically up. The only way is up. And then from 2021, it's been absolutely on a tear. So, and the reason being is that in moments of uncertainty, when everything is just capitulating, stocks, bonds, crypto, commodities, everything, people don't know where to go. So I actually think part of me thinks that whoever's controlling the puppet strings, they want to turn the world into a bag of shit. Because if people are struggling to decide, oh shit, I can't go into stocks, bonds, crypto, or whatever, what am I going to do? Well, I'm just going to sit in the dollar for the moment, because every other currency is tanking against it. The pound is almost a joke currency now. But any of the other currency has tanked against the dollar, which means everyone is flocking to the dollar. And therefore, when they release digidollar next year, or it's most likely next year, or even 2024, all of a sudden, they've trapped us all.
Because everyone can cash. Yeah, see, that's I guess that's a similar view to what I've about before. Because I mean, it's happened it's happened before. Like back in the 20s, I think it was JP Morgan himself and a group of insiders who purposely put out rumors on like bank runs in order to start bank runs to take all of the regional banks and just merge and take over, transform, etc.
Is the
But yeah,
bank run 1909? Yeah, is the bank run in 1909, and then they got together, and in 1913, that's when the Federal Reserve came into fruition.
what was the island again?
Jekyll Island.
Yeah, Jekyll Island. God, just by name, Jekyll and Hyde. Eh?
Yeah.
And then, yeah, I mean, with the bankrolls of like the war, and I mean, World War II is when the US really came to its own. I mean, just let everyone else fight until it's time that we pick a side, bankroll both sides, and then bets and off we go. I think even like the Luftwaffe, their aviation fuel contained a ingredient that was patented by somebody oil. One of the big US oil companies was the only one because it had the patent to this particular type of oil, which allowed the Luftwaffe. It was a complete fuel for the German Air Force. Therefore, the Blitz wouldn't have happened if it wasn't for this American firm. And now, again, US has left the EU literally out in the cold because it's by blowing up Nord Stream, which I don't know if you saw.
It was the British that did it.
Yeah, so it hasn't been published much on mainstream media, but the mainstream media did publish about Liz Truss's phone getting hacked. It's a bit of a coincidence that she turned around from "I'm not resigning" to immediately resigning. And the theory is because also even BBC said about how her phone was hacked and there were investigations. But according to sources, she texted Antony Blinken literally 1 minute after the pipelines blew up saying it's done. And that's why she had to resign so quickly. So we hobbled them to the US because what can the EU do now? They have to buy oil and gas at extortionate rates from the US. They cannot produce the industry that they are so known for. I mean, have you seen the how overbought the FTSE MIB was like 2 weeks ago? Like if you look at the RSI on the FTSE MIB, the Italian index, even the DAX looks bad, but at one point 2 weeks ago, it was insane. Like I've never seen like an RSI like that in like the Europe's worst economy, and it was huge. I'm not sure if you've got the chart there.
I haven't. No, I don't look at the FTSE mid, but I tend to look at the Dow Jones, S&P, Nasdaq, the DAX, and the FTSE.
Fair enough. Yeah, the which one's that you got now?
Oh, that's just the FTSE, and but no, I don't look at the FTSE mid.
Yeah, I do just because it's one of those. It just moves like mental. Crude inventories have fallen by 5.19. I'm not sure what the expectation was, but that will rally oil. Tell you what, it's interesting to see that the market is now pricing treasuries, whereas the opposite, for those who aren't familiar, usually before the markets were good news is bad news, you would get green bonds would be, well, get this right, because the yields going lower would be good for stocks, as in, I'm trying to think now of the green. So green is dropping yield because actually the actual treasury increases in price versus the yield dropping. But yields going higher on treasuries usually has been good for stocks. But in the good news, bad news market, that indicates higher interest rates. Therefore, it wasn't. And people used to, before good news, bad news, flock into treasuries as a risk-off asset. So treasuries would rally and stocks would drop. Treasury yields were usually going higher when the stocks were going up. I'm confusing myself here. But now the markets seem to be turning that back to reality. Treasuries have been going absolutely nuts over the past 2 weeks in terms of yield dropping drastically and the market just literally gearing up. It seems like reallocations from banks and funds are going into overdrive to long-dated treasuries in particular now. And the curve inversion is going nuts. Do you follow like obviously everything from a macro view, but you trade treasuries at all or like commodities?
No, I tend to like doing the second and third order consequences of stuff. So if most people look at the first order stuff. So if let's take the S&P 500, loads of people trade that. There's so many eyes on it. And so when something happens, it's hard to have a bit of an edge on it because everyone's reacting so fast. You have so many high frequency trading firms on it, etc., etc. So I like using bigger things as barometers or indicators, and then trade the other things which have a direct consequence to it. So, for example, and sometimes there's a lag. So the edge has gone a little bit now, but for a long time I used to look at the S&P 500 like a hawk, and if that would start to dump, or it was setting up a pattern which was like 90% probability of it dumping, I would then start putting on big shorts on alts, as in crypto alts, because that would be a sort of a third order consequence. Because if the S&P 500 then dumped, what would Bitcoin do? Bitcoin would then dump. But then what would alts do? If Bitcoin, this is back in the older days, if Bitcoin then dumped, alts would then dump even more. So therefore I'd have way more upside, as in profit, by placing the shorts on the alts before the S&P 500 toppled. Does that make sense?
Yeah, that makes sense to me.
So yeah, if the S&P drops 2%, Bitcoin would drop 4 or 5%, and then alts would drop like 10%, and therefore game on, baby. But that edge is sort of diminishing these days.
Well, the correlation between since FTX, correlation in Bitcoin stocks has been just a dud. Obviously it's happened. There's been a little bit of selling off from it went down from 17.4 to 16.8 where it is now, but in the grand scheme of going from 4,100 to 3,900, just a little bit above, that didn't really spill over 600 points on Bitcoin from that sort of move in the S&P before. But I think it's ever since FTX, obviously, because the stocks were on an absolute tear at that time. And obviously, crypto completely went the other way due to external factors. So it seems to not have. But right now, I mean, I don't do any sort of tight stopped trading generally. If I use stops at all, not financial advice, not risk management to anyone. But the reason I do that is because I would never enter a full clip position, 100% of my intended amount at any one price. I will always average in, I'll always do small amounts. And especially now with Bitcoin, because I swear to God, honestly, any even some individual traders from home could move that if they had a big enough pot. It doesn't take that much. I mean, I was concerned for liquidity because we have vEmpire in our protocol. We have staking pools, and we have some of those are Mana and Sand, the metaverse. And I was buying back liquidity to add into the pools, and I could see my buys impacting the chart on Binance. And that gave massive red flags to me because I mean I'm not saying that oh my God, my size is size, as in these weren't even they were 5-figure buys, but they were low 5-figure buys, and they shouldn't have been showing an impact on Binance, not in those sort of mega caps, top 30. So even with Bitcoin, if somebody runs a small trading shop, they'll have multi-millions. Even individual traders from home, some of them will have large pots of up to 10 million. And unfortunately, with where the market is now, I just can't trust going large and not leaving lots of space because the wicks are so scammy. Honestly, I think I might even be able to show on Ethereum. Like literally, it's insane. Like I had on Bybit, I had 2 orders placed, and I had one of them. I had it at 315. I had orders to sell at 315, 1315 on Ethereum, and twice I had wicks to 1314 exactly to the point, literally, and just 1 point. And it's really a max pain market out there right now. Like honestly, so I just can't go heavy on anything. I have to be so wide because there's so many stop loss hunters out there right now. I'm not sure what your
I mean the workaround to that, because they are a market maker and they can see where everyone's stops are, and generally if you're placing stops where everyone else is placing a stop, that will be a high liquidity area where they will be hunted. So the best thing to do is to, if you are derivative trading, to if you're placing a big short, you can still put size in. Just make sure your liquidation level is freaking nowhere near, like miles away, but then have mental stop losses where you wanted to get out. So that way, if there is a big wick up into those volatility areas, they always retrace. Then you can decide to get in or out. But yeah, going back to what you said previously about the correlation just with the S&P. As I said, it ebbs and flows. Sometimes there is definitely a correlation there. So if you pop up the chart, I'll show you. So the red and green stuff, that's the S&P 500, and I've just overlaid Bitcoin. And you'll see, so basically, S&P 500 starts to really wane down over here. So let's call that 0.1. And that move for Bitcoin is here. So that's 0.1. You then have a bit of so this is just basic fractals, really. So here we have the S&P 500 retracing back up to, or pulling back to this resistance. So let's call that 0.2. We then had the same over here with Bitcoin, just simply copying. Then another leg down to that pivot low, which it is, in fact, there's two there. So let's just do that. Let's call that 0.3. S&P 500 has a big old move up. 0.4, Bitcoin move up. It was not that big a move up. So this is where a lot of people said, correlation is breaking down, which it was just reacting a lot less. The correlation was still there, but the move, I mean, it was a mega move in the S&P 500, not much in Bitcoin. And that's mainly because at this sort of area down here, that's where the Bitcoin miners are now starting to have more of an influence because they're starting to sell. But then the S&P 500 absolutely dumped, and that then took us to here. Call that 0.5, over here 0.5. And then what's happened, this is quite interesting in my opinion at least. S&P 500 had a big rally here, call that 0.6. Bitcoin barely rallied at all.
No idea what happened to me there. I'm back.
It's all right, you haven't missed anything. But yeah, so the crazy thing is, if the S&P 500 now tanks down into this little hole, which I'm anticipating, we're going to see a lot of pain. So basically, move 7 for S&P 500 should be a nice little move 7 down for Bitcoin. So
I'm sincerely. I mean, what are your thoughts in terms of? I mean, I am fairly. After we moved back down from and closed below the 200-day moving average on S&P, I was fairly certain that we had topped out. I think a close below 3,900 or below 3,920 for me would just confirm like imminent death. But I could still see a retest of the 200-day on positive CPI data. I mean, I can't see the Fed. I cannot see the Fed possibly doing 25 ever. Like that's like off the cards for me.
Yeah.
50 is expected. I mean, I could see them coming at 75, just to really add max pain to everyone. But I mean, I could see potentially a run up like we had on when Nasdaq went up like 7% in one day, on the back of like a 0.2% miss. I could potentially see a wick back up to like 200-day from a positive CPI print next week, but I think it'll be a very short-lived pump and dump. But yeah, interested to know your thoughts on whether you think that we could retest for 100 again, or whether you think that that time's gone.
Yeah, for 100 for S&P, yeah. I mean, that's still within just normal noise. So yeah, easy. I tend to look at things on a bigger picture. I don't like going onto the lower time frames. I get a nosebleed. But yeah, from the next sort of mini macro move, I'm just waiting for that big move down to 3200s, etc. And the thing is, crypto right now is really suffering because of the miners. Oh no, that's bad. That's incorrect. FTX was a triggering, which basically highlighted the massive errors that's going on with all of the exchanges. But it's not just FTX's fault. What we have seen for months now is that massive miners are getting absolutely pummeled, which means, and a lot of these miners, they are massive companies where they have staff, they have OPEX, they have everything. And so they have to continually sell Bitcoin to cover OPEX. And like, for example, there was, I think last month I read that there was this massive firm that had $10 million per month in debt payments alone, just debt, ignoring all the other outgoings, but they're only making $2 million per month from mining. Well, that was like a month ago. So really, they're probably only making 1.5 million a month, and they've still got the 10 mil a month debt servicing. So loads of miners are going to have to shut down, sell everything, just quit, or they'll literally force into bankruptcy. So at the moment, I'm just very bearish. We've got loads of I can't see anything positive in the short term, especially moving into 2023. Now that you see even Janet freaking Yellen talking about these crypto crashes, and the White House is now trying to put their oar in it, 2023 is not going to be a V reversal recovery. I'm pretty much 95% positive on that. Everyone seems to think that, once we have the big move of Bitcoin down to 12, 13K, it's then V reversal back to all-time highs. It's not happening, folks. We will not see all-time highs until there is a spot Bitcoin ETF, US-based. So BlackRock, Grayscale ETF, doesn't matter. That won't happen until heavy regulation is in place. So the institutional money have guidelines and bowling lanes. They know what they can and can't touch. And that won't happen until, the crackdown happens. So 2023, I think, is going to be a regulatory nightmare. Everyone's going to get banged, basically. Even Ethereum mainly, it's a security. So who knows what's going to happen there, which is why for now, for the short term, I'm only touching Bitcoin. It doesn't have any of that regulatory tail risk. Whereas and I'm a massive ETH fan, it has huge tail risk at the moment, inbound.
I think I'm very much of the agreement in terms of what I'm going to be looking to buy. I mean, I would love to get down. I mean, my targets I usually get laughed at. I mean, in the scenario that Grayscale and like Digital Company Group go, I could see a wick down to 1.7, 1.8. I could see, I mean, I was super bearish like before, and I thought there was a very good likelihood that we retested 5K with the global macro environment and how bearish I am on where stocks could end up. But with like FTX, Grayscale, I am very, 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 there's a gap to fill. There's multiple gaps. One is down to like 4K if the year closes out with like an engulfing candle. But I mean, yeah, that's my doom scenario. Which I mean, at the end of the day, I don't think people quite know what sort of a crackdown and regulation could do. I mean, the crypto market cap now is less than $1 trillion. That is not a lot of money. It seems like a lot, but for markets, that is not a lot. And it's already been decimated with liquidity. And I'm I know the Tether FUD comes in every year, but I am more bearish than ever on Tether. Their association with these dodgy Caribbean banks is screaming like red flags to me. And if that goes, like, God, game over. I mean, literally, what will be left? Binance, like, yeah, I'm just thinking, like, and also if one more exchange goes, all of them go, apart from maybe Binance. But even then, like, users lend on the platform, like, and they deposit their own shitcoins to borrow like money, which BUSD or like Tether, which they then exchange for actual capital they can withdraw. And I think that liquidity pots, I think there's going to be a hell of, like, people think there's a liquidity crisis now. I think they have no idea what's coming, to be honest. It's going to be crazy because everyone's going to be rushing to the exit. If the regulation comes in, and once those big players start, well, most already have, but when certain big players suddenly want to swap their internet money for real money that they can withdraw to their bank account, then that's when things are going to get very, very interesting. But at the same time, I cannot wait to be able to get to a situation where I could potentially buy and have like multiple Bitcoins on the ledger. Like, I've never thought that would happen again. And it is going to happen, in my opinion, where, you know, Bitcoin and owning a whole Bitcoin could become affordable for, like, you know, for some people. Obviously, still, you know, multiple thousands is a lot of money. But in terms
Well,
of
actually, it is affordable but it's all about prioritization. Most people don't prioritize. So let's say you're someone who's a low earner. You have low, you know, your 9 to 5, low earning job, etc. So and you have no savings. Yes, you know, you can own a whole Bitcoin if you have no savings, but it's a prioritization issue. And I remember this, you know, 12 years ago when I was stone broke. Because there's nothing, and this is not financial advice at all, by the way, but this is one of the things I did in the past. Okay, because what I'm about to say could get people into a big spot of bother here, but I'm just being this massive disclaimer. So let's say you're a low earner and you want to own a whole Bitcoin, but you don't have any savings, etc. There's nothing stopping you from getting a loan. Let's say, what is it, Bitcoin now? $16,830. You can get a loan for $16,830 and then pay that loan off over the next, I don't know, 3 years, 5 years. And then don't just have one job, have 3, have 2. I had 3 jobs at one point. So, and I know this sounds really wanky, but this is what I did when I was utterly poor, broke. Poor is a mindset and a perpetual mindset. Broke is temporary cash flow issues in my head. So what I did is I got massive loans when I was really broke. I plowed it all into investments and got 3 jobs and tried to set up part-time businesses. So so it is affordable even at these prices. You just got to prioritize like hell.
Yeah, I mean, there's certain like ways that people can try and, you know, what people spend money on is completely down to them. I mean, there's always seems to be a way. I always think that there's I think efficiency is super underrated, and that most times if people are too busy for something, it is a prioritization thing. I mean, yeah, at risk of us sounding like like you know when you saw did you see the drama when what was, I think it was Molly May from Love Island said like, I don't believe that people can't do this, and she got in trouble. As in like people like working from nothing to like get it, and she doesn't believe it. She had no privileges. So at risk of sounding like Molly May, I do think that there is a lot of excuses as to why people can't necessarily allocate time to certain things. Like, yes, there's going to be instances where that doesn't make sense, outliers where that doesn't make sense. Yes, some are more privileged than others, but at the same time, I used to, when I was back working my old job in VC, I liked it because it was very easy, and it was very easy because it meant that I could spend lots of time, well, downtime doing what I love to do, which at that point was absolutely nothing, just watching TV and just wasting time. But now I work harder than ever, more hours than ever, but it's 10 times more enjoyable to me than it was working much shorter hours at a job that I didn't like, which shows how much free time I had before. But it doesn't feel like it. A lot of it is motivation issues, I think. A lot of times, obviously, yes, with a big caveat that we're not saying that like there's different levels of everything, but yeah, we have had a few questions in. I see you've been answering as you go on, which is very good stuff. Was there any in particular there that you wanted to touch on or explain a bit more detail? Any questions that have come in sort of as we've been going that you've typed responses to?
No, I've only typed one response. Someone said that there'll be tons of suicides if Bitcoin goes to $800. And I just said, and tons of future millionaires that plow everything into Bitcoin at those levels. You get rich in investing when you buy your asset, not when you sell. So it's the timing of when you get in, really, that is an 80% of the work. So now we're having, capitulations across the board, all-time lows pretty much, and there's future pain inbound. Now is the time where you should be absolutely mind-bogglingly excited about the future. I'm so incredibly excited about the future, even though there's lots of pain to come, because that is when you buy, not when Bitcoin. If Bitcoin suddenly zooms up to 100K next year, I'm going to be worried. I'm going to be really freaking concerned, and that's when I'll be sort of selling. But yeah, these lows, I know it's been painful. And by the way, for all I'm an open book. I will always share my losses. Even though I have been in cash for most of this year, basically since January this year, I've been in cash. I've done, some shorts, etc. But over the last few months, I've made probably 4 or 5 really bad calls where I've badly bottom picked, if that makes sense. I've lost over £500,000 personally in the last few months. But I'm still wildly optimistic about 2024. But yeah, Mike Ryder. So has a question. Sorry, shall I answer that?
Yeah, for you.
How heavily are you in DeFi right now? I'm not at all. I don't trust anything in DeFi. Everything is going to go tits up. Personally,
have you ever been?
Sorry,
have you ever been into DeFi?
Oh, big time. In 2021, I was literally just DeFi up to the balls, up to my eyes. Sorry. It was DeFi season last summer, big time. Especially with DAOs. DAOs was like the cherry on top of the cake, and we had Ohm and Wonderland and whatnot. So yeah, at the moment I'm just all in cash, just waiting. So I'm pausing all DeFi strategies for the meantime, because you're adding systemic risk. So let's say you buy Ether, right? Or you buy ETH. What is your counterparty risk there? Your counterparty risk is that Ethereum gets slammed by the SEC. Okay, fine. What if you buy Arbitrum, right? Arbitrum's a layer 2 on top of ETH. what is your counterparty risk? You now have 2 layers of risk. You have not only the risk of Arbitrum going bust, but you now have the risk of Ether, going bust as well. If Ethereum goes bust, then Arbitrum too goes bust. What about buying GMX, right? GMX uses Arbitrum. That's a DeFi. It's a DEX. It's on Arbitrum. So you now have 3 layers of risk. What about if you buy GLP and then, no, it's a bad example. Let's just say you have another. Ignore GMX. Let's say you buy a token on Arbitrum, which you can then use as liquid staking on another platform, etc. And then you can use that as collateral to do lending. And you can do all sorts of stuff like this on DeFi. You've now got like 5 layers of risk. Only one of them needs to go, Pete Tong, and then it's game over. And that's what we saw with Luna going bust and UST and FTX. I don't like those multiple layers of counterparty risk. So at the moment, when I go back in, it's just Bitcoin. Now, if you study cycles, it's Bitcoin that recovers fastest and first. Remember that, not alts. It's Bitcoin that booms first. Alts catch up later.
Have you ever looked at Cult DAO?
No.
Cult as a ticker, just on the concept of DeFi, and well, it's crazy. I saw these tweets, right? Somebody saying there's a new thing in crypto, real yield, and and I thought, Jesus Christ, like that is not new. That is just people just like, oh my God.
TradFi.
Yeah, exactly. So anyway, Cult DAO, I am a heavy holder, but they have a very, very interesting and very organic DeFi-based model where essentially every single transaction, every TX, like every send, every sell, every buy, 0.4% of their token goes into a treasury. 0.4 because then basically standard Uniswap 0.5, people don't necessarily notice it because if they have that set anyway, then they don't miss it when it goes. But the top 50 stakers called Guardians, of which I am one, and we are allowed to put proposals forward for investment, but we can't actually vote ourselves. So they've invested over $2 million USD through this system, and back when it had its full volume, it was doing 100 million through Uniswap, and so the amount of the token being sucked out of circulation and into the treasury was insane, because all of that volume meant that even if you submitted, like, each Guardian could put one proposal through, even if all 50 put one through, they couldn't do that for a certain amount of days. So I think they could only put like a certain amount out. And so it was becoming not just deflationary in the fact that 2.5 ETH out of every 15.5 is burnt anyway, but because you can't get the tokens out as quick as they go in, it sort of deflates it from that aspect. So then how it works once they've invested the money, once they sell it back, whether it's like a liquid investment or like a seed investment, they use it to buy the token. Half is burned and then half is sent to the stakers. So it's a fully organic DeFi loop. Like there's no Ponzi-nomics, there's no yield whatsoever apart from what comes in organically. So the only caveat is that when they send out the 13 ETH, it's priced in Cult. So they send 13 ETH worth of Cult. So the problem with that obviously is initial sell pressure. But the benefit is that the more that Cult drops in value against ETH, the more is burned, because everything's denominated in ETH but sent in Cult. So it works like very clever organic tokenomics without any of the Ponzi stuff. So just
but it's not real yield though.
So the yield that comes, that's what's sent to the proposal. So that is used to invest in other projects. So they will take, for example, like how VC would invest 50K for 0.5% of other tokens total supply. So they never receive cult back that has been bought at market, but they will only ever swap investments they've made back into their token and then buy it back. So no tokens are sent, apart from where they're investing into another company. The only yield that's sent back is them encashing their investments. Do you get what I mean?
Yeah, I'm just not a fan of anything which doesn't generate proper revenue, though. It's one of the reasons why I was massively into DAOs in last year, but moving forwards, especially with Celsius and everything going tits up, anything which doesn't generate real revenue is going to be heavily scrutinized, if that makes sense. So yes, you're making revenue in terms of the token, but I mean, FTX's main balances were in FTX, its own token, not in actual cash.
This
it's just my take. That's all.
Yeah. Well, this isn't a platform or anything. The whole thing is run autonomously. There's no human interaction at all. It's completely autonomous. There's nobody who owns any of it. All the smart contracts are announced, and everything is completely on chain. So there's no third party. It's the only fully decentralized DAO I know, which isn't just like a snapshot voting system. There is actually nobody behind it. There's no leader. It just constantly functions based on volume, sends X to the treasury, proposals put forward, it sends it automatically. There's no human interaction in it. So I usually have the exact same thing. I was never into Wonderland or Time. My brother was. He didn't get out at the right time. But yeah, I mean, I'm conscious that we've almost over an hour, but we do have a few more questions left to go.
Yeah.
Here we are. There's a good one. What's your takes on that?
What are some crypto industries to look out for when the bull market starts again?
I think like sectors like metaverse gaming or like DeFi, etc.
Yeah, it's a good one. I think gaming is going to be. I mean, a lot of people are shouting about it now, and I think actually, weirdly, the market is actually correct there. I think gaming is where you're going to get the mass adoption. When you look at the adoption of the internet, it took 23 years for the internet to hit 1 billion users. Crypto's hit 1 billion users in 12 years. The network adoption is just phenomenal for crypto. But with the internet, it's always drugs, porn, and gaming, really. Drugs, porn, gambling, and gaming. That's really what boomed the internet. And it's going to be pretty similar to crypto. But I think all it needs to do is a major games company like Activision, or if Fortnite was gamified, or tokenized, let's say, or COD. Like, I banned myself from playing COD 6 years ago, and I've now downloaded COD Modern Warfare 2 for the first time in 6 years, and my life is slowly draining away. But in COD, you get XP, don't you? You're obsessed about XP, it's up-leveling your weapons, etc. Well, why can't that be a token? Why can that not be a token, and I can just fast forward and buy the token?
I always say the first person who nails the first game company that nailed a first-person computer or a FIFA or Pro Evo on chain. And once one of them takes that, once it becomes a tiny little dent in market share to Web2 gaming developers, it will be like a tsunami of them just throwing it over. It will make the meta rebranding like hype look.
I mean, that's an easy 1 billion users just like that. But obviously there is a risk there though, because you'll end up creating some shit like cesspit like Axie Infinity if you don't get the tokenomics right. So if all of a sudden Activision were to tokenize XP on COD, and you gain XP from playing, and then what are you going to do with that XP? You're going to sell it. Okay. So all of a sudden you end up with a token which only has sell side pressure. So it's a bit like with Axie Infinity. You have AXS, the main token, the governance token, but then you have SLP, the smooth love potion or special love potion, or whatever it is. that, like, there was only one vector on that token, which is sell. People were gaming in the Philippines like 8 hours a day just to gain, you know, $100 worth of SLP, and then they're selling it, or less than $100, but $10 more like. And so you got to be very clever with the tokenomics, whoever, you know, if that future, you know, shoot 'em up game developer is. But yeah, in terms of next industries, I think game houses is, I think, the more astute, not astute, the better play, because I wouldn't just pick random games that pop up, because games come and go. They'll have 2 years of, you know, Twilight and then game over. So it's better to pick game houses, as in companies that are developing the game. So Activision, etc. Or yeah, because then, you know, they're constantly pushing more Harvey words when crypto charts.
I guess he wants to see TA on Bitcoin and where you think the next move goes. I'm sure we all want to see.
Yeah, sure. How do I swap? I'm sharing screen. Yeah. Yeah. Okay. So so before we look at any charts, in terms of the liquidation maps on Bitcoin, it's getting squeezed. So what we've had, actually, when we look at Bitcoin right here, let's get rid of the overlay. So about a week ago, the amount of volume on derivative trading was just insane. So, for example, for those who are not familiar with liquidation maps, all these little clusters here are people's liquidation points. So this big one here is 12,500 or 12,629. So everyone that's going long will have their liquidation points on this side. The big green line is the current price, and anyone that's shorting it has their liquidation levels over here. Okay, so I find it interesting because it's quite funny. I took the piss out of someone on a video several times because they had something like $1 billion worth of liquidation points at 20,500, and they had it there for, oh no, it's still there. Yeah. Sorry, not taking the piss, but I was just saying that I don't think this person here is sophisticated. So what is it now? It is, yeah, look at this. So what this means is that there is someone out there, and I think it is probably one person, that is shorting Bitcoin, and they've put their liquidation price at 20,500. So it is around, if I really zoom in, it's between 24.50 up to 25.50. So it's basically 20,500. So what this means just is if we were to, I'll just draw some shizzle. Let's try 2,500. 2,500 takes us to here. That level there. So what this means is that if price were to suddenly shoot up to 20, you know, this way, it'll start liquidating all of these clusters of liquidation levels. But who in their right mind will put a liquidation point at 20,500? One, it's a massive 00 level, and it's not even in the outside of the noise. I mean, granted, I can see that they're probably drawing something like this, and yeah, it's far away from it. But the thing is, that is within all of this noise here. So when you're looking at that noise, you can just look at the chart and go, right, there is a lot of noise in this area here. Therefore, you have to be batshit crazy to put any stop loss or liquidation point within this noise, because you're just going to get hunted. At least put it here at 20,000, 22, screw it, 20, yeah, just above 22K. But even then, people will be hunting that. If I was the head trader of JP Morgan, I'd be looking at this going, right, all the plebs are putting liquidation points over here. The slightly smarter people are going to put it at 22. So screw it. I'm going to rally this market up to 24, cause max pain, and then put the mother of all shorts to dump it back down to 8. I mean, that's, you have to think like the sharks. If I was a shark and I had pretty much an unlimited order book, you know, head trader of JP Morgan or Goldman Sachs, and I had, you know, $100 billion and I could do whatever I want, well, not 100 billion. You know, I had $100 million allocation to play around and piss, crypto people off, that's exactly what I would do. But going back to the liquidation point, sorry, if we can just get that lick map up. What we've seen is a massive deleveraging. So the other day, sort of peak long licks was around $3.7 billion. And now it's dropped down to 734 million. And yeah, and also we had you see these big old sort of clusters. There was like a $5,000 gap where not much was happening, but now you can see it's getting squeezed. So price is literally just skimming on either of these clusters. So what this means is that if price, let's say some bad news announcement comes out right now, and it forces Bitcoin into sort of the 16,600 level, guess what? That big cluster of liquidations is then going to propel Bitcoin probably back down to sub 16K, like that. So what these maps show you is that it won't just stop there. That if we look at this, or if you look at that, there's roughly $82 million worth of long liquidations that'll hit the market at market, not limit. It's at market. So it's not that much, but $85 million worth of shorts being placed like that will then propel probably Bitcoin back down to here. So I don't think at the moment, looking at the lick map, we're at any risk of a big capitulation move down to 12, 13K, unless it's something big. But having said that, looking at Forex calendar, next week is the mother of all news announcement weeks. We have Tuesday the 13th with the US CPI numbers, so inflation figures coming out. The next day, the US are doing their FOMC, federal interest rate announcement. The very next day, we've got the Swiss National Bank and the Bank of England having some big old announcements. The ECB is having a big press conference. It's like the sort of orchestrated that this week is going to be the week of volatility. So what is it? It's now, so literally this time next week, we're going to see some pretty big bars on the S&P 500 and crypto.
Yeah, I mean, I find it hard to, it's sometimes I think that it's like playing 4D chess, because I am constantly like, everything I do in life, I overanalyze. I always talk about how when I used to commute to London, I would think like try and map in my head which train carriages is everybody getting onto, because if I know what everyone else is thinking, I can try and do the opposite. So I would time it by walking down to a certain level, but I wouldn't get on the first door, I'd get on the second door because everyone's going to want to get on the first door, etc. And I do the same with trading, but sometimes I think I overdo it. And I think that one thing I did where everyone did, as much as the trend line, like the trend line on the S&P 500, it was perfect. Everyone said it's going to overdo it. It's going to overshoot, and it's going to be max pain. But everybody was saying it's going to overshoot for max pain, that it literally did it to a T and it's pulled back. Again, I thought maybe we just hit 4040. So I loaded up significantly at the 200-day moving average, thinking everyone is thinking it's going to overshoot. So I'm going to go for the 200-day because I don't think it will. But then it literally went to the trend line, didn't overshoot whatsoever, because I was thinking maybe it's going to get to the 50% fib, which was sitting at on the long term, full chart from Jan, was sitting at 4150. So I thought maybe 4150, that'll be the overshoot, and then back down through the trend line, but it literally touched it and came back. I think it could still I think if CPI comes in low again, I think we could touch it again. Yeah, even then, I think it's just like the Jerome Powell presser something must have gone wrong. I don't know if you follow this guy who, again, he trades very similar to me and therefore similar to you. Reformed Trader is his handle. But yeah,
I follow Elon Musk, and that's all I follow.
Oh no, he's really good. I love his charts, but
Reformed Trader.
But yeah, it's It's crazy because I was thinking we've got to overshoot or undershoot because everybody is looking at that trend line, and we literally hit it perfectly. But again, it's because nobody thought we would. And so I wonder sometimes, like, going like Max Payne would obviously be an absolute tear up to like 25 and then a nuke. But at the same time, no one expects it. Everybody is looking at next week.
Yeah.
And liquidity is so poor. I think I saw a tweet from Zero Hedge like saying like the like depth on like the S&P today even was like abysmal. So yeah, I'm not really I don't know, I feel bearish for this week rather than next week, but I still think that any upside to downside, even from a low inflation print, is going to be very limited. But yeah, I am a bit worried that something has already gone very wrong, judging by how much Jerome Powell's tune changed between his last interest rate decision conference, where that guy tricked him and he like read out like a bullet point list of all the bearish stuff that he wanted to say. And then literally he was so flippant in the last speech. Like, honestly, it was like night and day. And it made me think, what do you know? Because he literally was like acting like it was over. But then the one thing he did focus on, which was wages, was the data that came in hot, which caused this sell-off. So again, I'm not really sure on the setup because it's pretty quiet between now and next week. But everyone is looking to next week.
Yeah, definitely. It's I mean, just from a technical perspective, looking at Bitcoin right now, we've cleared the June lows, right? So if that June low, depending on what chart you're looking at, this is the Bybit chart. If you look at the Binance one, it's going to be slightly different. But that June low, for shits and giggles, it's basically 17.5K, right? So if we just draw something around, or let's call it 18. Come online. Oh, dear Lord. Fat fingers. So it's that level there. So from a pure technical point of view, that level wants to be reattacked at some point. So, for example, we had a very similar situation over here where we had a big May sort of smackdown. Market consolidated a bit, and then eventually it reattacked it over here, in August. And this is very like this is just bog standard. There's nothing fancy, just basic TA here. We had a big overextended move over here, and therefore a 50% pullback is to be expected. So what's actually being created right now is a bullish rectangle, a very teeny weeny one. So ideally, we're probably going to see a move back up to at least 18K in the short term. I personally would like to see another attack of this level here. That would be very healthy. Because if we manage to get on top of this, everyone's going to be wildly happy that, hey, we're back up, V-reversing, blah blah blah. But this is where I'd like it to then smack back down to these sort of levels. But even if it doesn't get up here, we could see a rejection of that 18K level and start moving back down.
See, I had a limit hit to sell over the weekend. And I was very surprised it did hit because I thought it was going to be another 1315 ETH scenario where it literally like flipped in. But I had a limit to sell at 17,400 for the exact reason. But if you go slightly, you're about 100 points higher than the lows. I use Bybit, so and it just clipped it and rejected already. So if it does retest, obviously 17.4, 17.5, not much in it. But technically, we did clip it over the weekend a little bit. Literally for like one candle, I got filled at 17,400 exactly. Very, very briefly, the wick was. But yeah, I could see us retest again. I mean, I would load up 18 for me. I don't know. We'll see, but I'm very. I think certainly it's going to be down again to the data that comes out and what stocks do. If stocks retest 4100, then I'd definitely be on side with 18. But just the market looks weak. Like stocks have just literally been bleeding for like 6 days now. Like Yeah, it's getting bearish out there. I just had a reminder come up, so I don't know if that means or no, it's all right. But yeah, I mean, we're coming up to the hour and a half mark. Wondering if we got any questions that have come in since. What do you think of DEX tokens? I can only imagine what you think of like the Uniswap token or like sushi. But yeah,
I mean, they make a lot of revenue. Like, if you wanted to be super, super safe after all the regulatory stuff, just buy tokens based on revenue generation. So if you go to masari.io/screener, token terminal is better actually. Tokenterminal.com, and then free dashboard. Here we go. And then if you metrics revenue, here we go. Ta-da! So if you look at maybe not max, let's say last 180 days, you have to understand that it's going to be an institutional world, a market that's going to come into this place. You can have lots of old, fat, crusty white blokes that have been in the TradFi world for decades. They're finally going to get into crypto, and so they're going to bring along conventional trading ideologies, aren't they?
You literally are reading off my hymn sheet. This is the exact picture I use for the vEmpire whenever I'm talking about it, because our actual industry, and in fact, I've actually used in our first ever quarterly report, I compared our price earnings and revenue, and literally what I say to the T is that our assets are worth more than our market cap, almost double. And the reason why is that right now crypto is driven from hype and marketing rather than traditional analysts. And as those analysts move over, then they'll potentially look at VEMP, because we actually do have revenue and we have assets that are worth in excess of our market cap. So literally, just funny you say that, because my team is definitely watching this thinking that it sounds exactly like my pitch.
Yeah, like the conventional heads are going to plow into crypto, but with a lot more money than the average retail trader, and therefore the cream of the crop is Ethereum. Now, I understand. I'm fully aware of all of ETH's bad vectors, as in it's highly centralized. It's basically controlled by Wall Street. Lido has a huge stake in it. I'm aware of all of that. However, the other part of me understands greed and human greed. And that if Wall Street have basically put all their eggs in the Ethereum basket, they're going to make the Ethereum basket do well. But I don't want to touch it during regulation season, which is next year, which is why I'm just Bitcoin to begin with. And then once alt season starts, I'll flop over from Bitcoin into my portfolio, whatever it may be by then. But I will look for high revenue, as in real revenue things. So ETH will be there. Plus, with the triple halvening and all that, that's still valid. A lot of people are like, "Oh, Simon, he's talking about the triple halvening, and ETH has just gone down since." Well, yes. Well, no shit. Whenever you adjust issuance of something, you don't see the result straight away. You see it normally about a year in the future. So look at the Bitcoin halve. In fact, if you look at Bitcoin's halving, you always see the all-time high after about a year. So if we look at this chart here, go to weekly. Go to the log. There we go. So these big lines here are all the Bitcoin halvings. You always see the high normally about a year or so after the halving. And so what's happened with the Ethereum is basically a triple halving. So you won't see the ramifications of the ETH 2.0 soon, but it'll be more like in 2022. So that's that revenue. So it's worth having a look. OpenSea, I think that's falling in recent time.
When I was originally doing the analysis for us on Token Terminal, I mean, Uniswaps, even like their like DEX tokens, Uniswaps, like their revenue is shocking compared to like their market cap. But PancakeSwap had the best P&E ratio of any token when I looked.
Yeah. And CZ has a magic touch to begin with, but also active devs. That's also a very important thing. Which protocols have actually people working on it full time? And Ethereum still comes cream of the crop. Then we've got Atom, Cardano, Ada, Dot, Kusama. Like So you wouldn't be far wrong, having these in your portfolio and also the high earnings ones. But yeah.
Nice one. Well, yeah,
Nice one.
Yeah, tons of food for thought. Hopefully, no one's too depressed after having to cope with two bears. But there's method in our madness. We're not just bearish for the sake of being bearish. There's a very good reason to be. So what a lovely note to end on. But yeah, it'd be great to have you back on. For those who aren't aware, you want to just shout out your socials, your YouTube channel, and you're not as active on Twitter, are you? But you do have Twitter.
Yeah, I'm Siam Kid on Twitter and Siam Kid on YouTube. I get so many Twitter clones, which is frustrating. But it's this one. It's literally at Siam Kid, not Siam_Kid or anything like that.
Or Siam K1DD.
Yeah, and all of them. So far, to my knowledge, especially on Facebook's the worst. I've just given up on Facebook. You post something, and then there's so many like clone accounts saying, "Oh, thank you, Simon, for sending me 2 Bitcoin." All that sort of bollocks.
We get all that. Yeah, hopefully the bear market will get rid of that. But yeah, like and subscribe, guys. Thanks so much for joining. Definitely get you on again. But yeah, until next time, let's hope that we do manage to get that 18 so that we can all go heavy with size. Thanks so much.
Cheers.
Nice one. See you later.
Bye.